Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a balanced breakdown and the market tested the previous swing low at that 1804 area, made a marginal low, and then put in a bounce off of an oversold condition. At this point, heading into the open, we know that the sell side is in control and it's dominant, but we are coming off of an oversold condition, so a little bit of a bounce is quite normal. The 16.5 to 18.5 area is pre-market resistance. It can also be viewed as a micro bull bear zone where if the market is holding above it, then it tells you that the small balance that the market built in the overnight session is being held and we're actually holding above that balance at the lows, and it would be a sign that buyers are stepping in. But if we're failing at initial resistance and then we get back below 16.5 to 18.5, that would be a signal that the market is setting up for another test of the recent lows of 08 quarter to 10 quarter and 02 half to 04 half. So right now, the dominant side is still the sell side, but because we're coming off of a major swing low, off of larger time frame support, we just have to be nimble in that if we do start seeing some strong buying and the market's breaking out and holding above 16 half, 18 half, 21 quarter, 23 quarter, then we'll have to pull back a bit because a sustained breakout above 18 half, where there's some momentum behind it, could take us back up towards 31 to 33 and step by step, possibly even back up to 38 half to 40 half. So that's something we'll have to gauge in real time. So the 16 half to 18 half is really going to be an important zone off the open, and so far, like, we're seeing kind of a failed breakout attempt above it. So keep an eye on the zone. A failure at 16 half to 18 half would be a confirmation that the sell side is in control. And then on the downside, at these areas of support, we don't necessarily have to hold. This is the overnight balance. 02 half, 04 half is that bigger swing low. So we'll have to gauge kind of the level of momentum when the market gets down there, because we will have to get sustained downside momentum in order to continue lower. And then below 02 half, we can still get responsive buyers active at the support zones as the range of the day gets quite exhausted. So responsive buyers can be active at 92 half to 95, 88.75, and then we have strong support at 76 quarter to 79.75 and 1774. So those are still areas where buy side can step in, and of course the stronger areas of support are going to provide a higher probability of the market putting a bounce or even reversing, whereas the 92 half to 95 is going to be a riskier spot to initiate a long setup unless the market is very exhausted into it, and even then, sell side would be quite dominant as the market goes down there, so you might want to let that selling exhaust completely before you consider any long setups. So long setups right now are counter trend, so we have to be more careful with them. On the upside, like I said, 16 half, 18 half, 21 quarter, 23 quarter, these are really the key spots. If the sell side is going to maintain control, then you want to see it holding below initial resistance and pre-market resistance, and if we start breaking out above those zones, then we could be going back up to 31, 33, possibly 38 half to 40 half, and then the resistance zones above would continue to be active and spots where responsive sellers can step in. So our bias heading into the day is bearish, but keep an eye on 16 half to 18 half to confirm that short-term bearish bias, and then from there we can retest the lows and possibly make fresh lows. And then once we get really exhausted into big support, then perhaps we get some buyers back in the market and start balancing yet again. So those are the main ideas heading into the open. Let's see how the market reacts here to pre-market resistance and initial resistance. That'll help set the tone for the day, and we'll take it from there.